It all started with a simple idea that would generate $1.9 billion in cash, but has now descended into a rather ugly fight with $2.5 billion and the survival of the company on the line. The flip side is that, should a hostile takeover now be successful, there could be a significant reward for investors. In October 2023, Vista Outdoor, a specialist sporting goods manufacturer, publicly announced that it had agreed to sell its firearms and ammunition business to Czechoslovak Group for $1.91 billion. Not a bad payday for a company whose market capitalization was only $1.7 billion at that time, and would leave Vista with the remaining recreation products business. This news wasn't exactly a shock for Wall Street. Vista has two primary product lines: shooting goods, which mainly encompasses ammunition, gunpowder, and gun sights, and outdoor sports and recreation products, which includes everything from paddleboards to fishing, and BMS wear to stoves and barbecues. This combination of guns and recreation products may have worked well in theory. However, in 2018, as a part of the NRA boycott, consumers boycotted all Vista brands, even those unconnected to guns and ammunition. This boycott resulted in retailers deciding to no longer stock Vista brands, including their biggest customer, and the outcome was a material deterioration in financial metrics. In 2019, Vista announced it would sell Savage Arms and Stevens Arms, two gun manufacturers, to their management teams for a combined $170 million. Then, in 2022, Vista announced it intended to split the remaining company into two separate companies, one focusing on sporting goods, the other on ammunition and firearms accessories. This is where Czechoslovak Group entered the picture, with a friendly agreement to buy the ammunition and firearms businesses for $1.9 billion. The timing was opportune. Vista was one of the largest suppliers to the Ukrainian military and business was booming, hence the high price. However, soon after the sale announcement was made, things got messy. On the 19th of March 2024, MNC Capital Partners made an unsolicited bid of $35 per share, or $2.9 billion in total, to buy the entire company. This move was slightly more surprising than the bid from Czechoslovak Group, but not entirely. Mark Gottfredson of MNC Capital was a director of Vista until January this year, when he resigned, presumably to work on this takeover bid. The rationale from MNC is that their deal would keep Vista under U.S. ownership and would not pose a national security risk nor require a review by the Committee on Foreign Investment of the United States, which is needed before a deal with Czechoslovak Group can go ahead. The board of directors of Vista rejected the MNC bid, saying it undervalued the company and was not better for shareholders than the Czechoslovak Group offer, which would only see the sale of the ammunition business. Not to be deterred, MNC Group upped its proposed offer to $39.50 per share, then again in June to $42 per share, both of which were also rejected by the Vista board. However, at the end of last week, MNC submitted a final bid of $43 per share. This last offer was accompanied by a letter to the Vista directors which noted, "Our revised offer is conditioned on the Vista board, by Monday, September 9, having given notice to CSG that it intends to sign the merger agreement of $43 per share, so that it can be signed by September 13. Otherwise, our revised offer will be withdrawn." This offer of $43 per share values Vista at $2.5 billion, or $600 million more than the initial offer. However, by the time the MNC deadline expired, the directors of Vista hadn't accepted or declined the offer. Instead, a press release was issued saying, "Vista Outdoor's board of directors remains driven to maximize value for stockholders, will continue discussions with MNC and other parties, and looks forward to updating our stockholders in due course." This leaves considerable ambiguity about the current stance of the offer and likely outcome of this three-way tussle. If we look at the numbers from the MNC bid, an offer price of $43 per share in cash, a spot price of $38.29 per share, and a completion date forecast in Q1 2025. We can see an investor committing to the deal today could expect a return of 12.3%, which translates to an annual return of 24.27%. but with a risk-adjusted return of negative 8.71%, and an expected loss, should the deal fail to close, of 29.49%. Despite the return numbers generally looking positive, the risk here is that Vista won't agree to the MNC bid, and it's a significant risk. We calculate the even money probability on this deal is 72.77%. However, we calculate the probability of the deal closing at just 60%, which means there is a negative risk spread. This will make the deal unappealing to most risk arbitrageurs. However, it is possible that MNC could launch a tender offer and appeal directly to the shareholders of Vista. We looked at tender offers in the recent video with the Gulf Investment Fund, and I'll provide a link to that in the description below. Should MNC launch a tender offer with a guaranteed sale price of $43 per Vista share, this could make a very appealing arbitrage opportunity. If we hypothesize a situation where such a tender offer is made, and is at the $43 bid, and we therefore increase the probability of closing and reduce the timeline for holding Vista shares, we can calculate an investor could still expect a return of 12.3%, which now translates to an annual return of 99.77% due to the much shorter anticipated holding period, and a risk-adjusted return of 82.83%, a significant increase due to the certainty of an investor being able to tender their shares in a tender offer. At the current time, with multiple interested parties, and the Vista directors partial to the Czechoslovak Group bid, this is a volatile situation and would pose a very high risk and a probable loss of capital to any potential investor. It seems there is more risk than arbitrage available in this deal as it currently stands. What do you guys think of this takeover? Let me know in the comments, and don't forget to like and follow if you found this video useful. Be aware that all the figures mentioned are at the date of my calculations and will change in line with the share price of the company, any change to the takeover price, and the duration to close. As always, this information is provided for educational purposes only. You should not consider anything in this video to be investment or financial advice, nor a recommendation or endorsement to buy or sell any financial instrument. You should always conduct your own research before considering any investment and seek independent financial advice. Thank you, and until next time, enjoy life.